I appreciate you giving us your time and providing some insight on kind of some of these financial questions that a lot of people have, especially kind of with everything going on right now. I know the coronavirus scare has kind of led a lot of buyers kind of in question on what financing looks like nowadays. I know restrictions are out there now, some lending programs, etc. So yeah, I'd love to maybe start with kind of give me a brief kind of explanation on your background and how you
Yeah.
decided to go into lending.
Yeah. So I've got a finance degree, and my dad was in new home sales for 35 years,
Okay.
and graduated college and worked with one of the mortgage companies that he was partnered with. That was back in 2003, and I've been trapped for 17 years ever since. So absolutely love it. Like I said, grew up in a new home sales family. Always loved finance, loved the finance side of it. So becoming a in-house lender, preferred lender for a new home builder just seemed like the natural fit, and I just love it.
That's awesome, man. I mean, I know I've known you for a while. You seem to always deliver on what you've set out to do, and your reputation precedes you, especially within this company at Coventry Home. So I appreciate everything that you've done, and honestly, I'm glad that you're part of our team and helping us out. So
Yeah.
I want to dive into some of these questions, man. I definitely have some insight and different types of knowledge I want to kind of provide to some people. So talk to me about what's going on out there. It's kind of a crazy world. So, but more specifically, what are you seeing in terms of rates? How's this kind of messing with some maybe buyer programs that are out there to kind of help people move into their house? Do you have any comments on that?
Yeah, absolutely. So first thing we'll talk about is interest rates. On any given year, the mortgage industry is going to do about $6 trillion in fundings. And when the coronavirus really started to spread, there was major concern across the global economy as to what kind of impact this was going to have. And what that did was that caused mortgage interest rates to drop. And so, like I said, you're looking at a $6 trillion a year turnover in mortgages on every 12 months. And in the month of February, in about a 30-day period of time, because rates had dropped so much, we saw the mortgage industry do $2 trillion of loans. So we did a third of the business in a twelfth of the time. And what happened was a lot of lenders had all of these locks that they took in, and they didn't have any more money left to lend out because they had locked so many loans, that we saw interest rates drop and then unexpectedly just jump back up. I mean, there was a period of time where we were locking rates at 3.75, dropped down to 3.25, and then a week later they were at 5%. And the market wasn't saying, hey, we're at 5% interest rates. It was the lenders saying, we don't have any more money to lend. We're going to raise our rates to 5% to slow everything down because we have a liquidity problem. So since that time, what we've seen is the turnover happen. We've seen the locked loans for the refinances close. The loans that were currently being serviced have been paid back off. The money's come back into the system, and we've seen interest rates come down. That took a 45 to 60-day window for all of that to occur. During that time, the coronavirus did continue to spread and global economies continued to get worse. So what happened then was the Fed stepped up and they said, hey, we want to keep the mortgage industry moving again. We want to keep liquidity moving and keep loans funding. So the Fed has injected a ton of money into the mortgage-backed security market. And what that's done is that's given us low interest rates for the time being. And the Fed has basically said, we're going to keep doing this as long as we need to because we want to keep mortgage rates low. We want to keep liquidity high. We want to keep loans funding. So what we're looking at on interest rates is the lowest I've ever seen. Like I said, I started in this industry in 2003, 17 years ago, and we're locking 15-year fixed rates at 2.5%. We're locking 30-year fixed rates at 3.1, 3.5. And when you look at what that can do as far as affordability on a home buyer, it takes a buyer who 6 months ago maybe only qualified for a $350,000 house at a 4% interest rate. They can now qualify for an extra $100,000 at a 3.5% interest rate because the money's cheaper. And so as far as new home sales go, this has actually been a good thing for new home sales because it improves and increases the affordability of the houses.
Right.
The rate market has been excellent. And so what we're hearing for forecasts is that rates are going to continue to stay low through the remainder of the year. There's some uncertainty about what's going to happen in the future with the economic situation. The Fed has stepped up and said, we're going to keep pumping money into mortgage-backed securities to keep rates low. Where I see that as a benefit to new home sales is when you look at build times and you look at somebody buying a house that they're going to build from start to finish, you know, what do you think an average build time would be? 6, 7, 8 months?
I would say around 7 to 9 for sure, depending on the area.
So what's nice about what's happening is you look at a 7 to 9 month build time, and you look at a forecast of interest rates and the Fed's commitment to keep buying mortgage-backed securities. There's a lot of stability in buying today and closing 7, 8, 9 months from now with interest rates, because we won't actually lock your rate in until 2, 3, 4 weeks prior to closing. So you float with the market during construction. And you know, we've got these federal commitments to keep the mortgage-backed security market moving. As far as my 17 years in new home sales industry and finance, I've never seen anything where they're offering this much stability with interest rates.
It's honestly pretty incredible, man. Like, you know, seeing where things are at, giving the people really the affordability to get into a house. I mean, one, I felt like it was pretty easy even before all this kind of started up, even with higher interest rates. But
Hmm.
just kind of really understanding those numbers and what they directly translate to. I think when you explain it to a buyer, it's just mind-boggling. Like they're like, oh, you know, I come in at a $450,000 price point, expecting this payment, and they're like, you know, assuming it's maybe on a 4.5 interest rate, and then they realize they're at 3, and it's just like it's a world of difference. And you know, I guess that's actually a good segue into maybe the next question.